Hey there and welcome to another video. My name is Hugh, and in this video I'm going to show you the second spike trading strategy. And this is a strategy that's unique in that it only works on bullish moves. So if you're interested in learning this, let's get into it. All right, so this trading method only has two criteria basically. Number one, you're looking for a strong bullish move. So something like this would qualify, right? It goes way up and then there's this big pin bar at the end. And that's actually a pretty good sign because that shows that price rejected there and it's more likely that price will go down. So what you're looking for after this big move is a retracement into the area that I call the elbow. And that's because it kind of looks like the inside of your elbow. And that area tends to create a area of resistance. Not all the time, obviously, but it is a tradable area. So when price comes down, you're looking for that first snapback into the elbow, and then you're looking to take a trade down. Generally speaking, you would put a stop loss above the high of the move. In this case, this is a gigantic wick, so I would put it here where there's more solid resistance. So that would be the stop loss. I'll put that in red. And then you can put your take profit at the next support zone. So in this case, if we scroll back a little bit, that is a support zone right there, somewhere around there, right? And then the next one would be probably right around there or so. Okay, so those are the areas that you would want to target. And for this first, let's see, for this first target, let's move the, okay, so for the first target, you would have had a 1.1 reward to risk ratio, which is good. If you targeted the second level, you would have gotten 1.9, almost 2 to 1. So either way, that would have worked out to be a good trade. Or at least the first one. I don't know if the second one worked out. Let's see if the second one worked out. Yeah, so eventually it did get down there. But you had to wait a while. So it was probably better to target the first support level. So that's how that trade works. Now let's take a look at a few more examples. All right, so before I go on to another example, I just want to give you two optimizations that you can look for to improve your chances of having a profitable trade. So the first one is going to be the momentum of price. So is price trending in the down direction? So for example, this is a high here and this is a lower high. So this is a downtrend, and you can use a moving average or a trend line or whatever you want to use. So this could be a good area to look for a second spike, right? So I draw the elbow there and price did spike into there. And that's one optimization you can use. The second one is support and resistance. So is price stalling at a important resistance level in this case? So for this trade, it was not that clear because it kind of stalled in the middle. But there was some price action maybe around here that would have given you a resistance level, but still price didn't quite hit that, right? And trades won't be perfect every single time. But once you did get this formation here, even though it didn't hit the resistance level, this looked like a good potential place to take a trade. And that's what happened right there. Now let's remove all the drawings. Let's take a look at another example. Let's see if we can find something. Okay, yeah, this is a good one. So there's a resistance level or resistance zone between here and I would say probably about there, right? So price came into that and then price bounced off. And then we see a second spike pattern right here. You could have drawn the elbow in two different places, maybe right there would have been a good place, and then right here would have been another potential place. So it did miss this one, but if you drew the elbow there, then you could have potentially got into that trade. So those are two optimizations you can look for in addition to the big move up, and they will increase your probability of success. All right, so here's another example. This one's not as obvious because there's a huge pin bar at the top, but you do have some resistance here. And you're looking for a elbow in this area. Now this one is not as well defined, so it's a little bit harder to tell, but I would draw the elbow right in there because you have these two touches in there and price kind of stalled in that area. So that looks like a good area. And then it also corresponds to the resistance and support levels back here. So that's the level that I would be looking for. And then if I move this forward, as you can see, it barely touched it. You might not have gotten that trade, but it did fall off dramatically. So I probably would have targeted maybe down here because that move was pretty significant there. So if I put the stop loss above the high here, let's change the color of that. Okay. And then I entered here. Okay, so let's figure out how much that would have made. So stop loss here, take profit down there. So that's a 2.6 to 1 reward to risk ratio, which is good. So again, you have to practice looking at these things, but again, you want to look for a big move up, and then you want to identify the elbow, and then you want to look for that second spike or the first spike after the initial spike, so the second spike into that level, and enter a trade there. Okay, let's take a look at one more example. All right, so this is a good example. Big price move up. Price looks like it's stalling, so you're looking at 1, 2 rejections of this level up here, potentially looking for a head and shoulders on this side. So I would draw the elbow probably right in there, right? Because there's this price action here and there's this price action there. And then if I was going to put a stop in, I would put a stop up here. And then I'll move the chart forward. And as you can see, yes, it did punch into there. So that would have been a good trade. You could have also taken a trade here. Anywhere in that zone can be a good place to take a trade. So price popped into there, take a trade, and then see what happens. Okay, cool. Yeah, price fell off pretty significantly. So I would have put the take profit probably conservatively right there. So if you enter a trade here and you didn't get a really good entry, let's see, bring this down to here, and then bring this down to there. Okay, so that's about a 2.3 reward to risk ratio right there. And then could have got a little bit more, but I wouldn't get greedy. That was actually a good place to put it. Another area would be down there, but that's a little harder to get. Okay, so that's the second spike trading strategy. Again, like with any other trading strategy, back test this for yourself. Not all trading strategies are going to work for all people. It has to match your personality. So test, test, test. And once you finally have this figured out, then you can start thinking about putting it into live. But I really like using this pattern with hedging. And I find that it's a good pattern because it can identify the end of a trend. And that's the area that I like to take trades in. All right, if you like that video, give it a thumbs up, subscribe and hit the bell to get more videos like this. And thanks for watching.